Hello and welcome to another update video about Coinbase. We haven't covered Coinbase for a while. It's time to look at the chart again and take a look at the current structure. So the chart is moving most likely in a bullish structure in what I would consider a diagonal pattern to the upside, which started here at this low point in December 22. We had a wave 1 to the upside, a wave 2 to the downside. This year should ideally be an A wave with a B wave pullback, and now we're moving up in wave C of 3. Okay, so I could also count it as a 1-2-1-2 setup, but because this second, what would be a wave 1 in that count, is basically too long to be a reliable 1-2-1-2, it often fits best to count it as a 1-2 AB. Then now the wave C is unfolding, which is a 5-wave move. Yeah, off wave 3, then we should get a wave 4 and a 5. Basically, the wave 1 also can be counted as an ABC structure. It's basically a diagonal pattern. Yeah, so all of that would form a much larger wave 1 leading diagonal. And you see the roadmap on the chart. Now, this would mean, that doesn't mean it's not trending strongly. It indeed is. It just means that the subwave structures are a little bit messy and don't move in impulsive structures. Whereas currently, in this current C wave of wave 3, yep, this seems to be an impulse. So we're currently in this third wave, and we need to now take a look at the current structure because there's an imminent setup I see. So if we assume the C wave is unfolding, we need to look for 5 waves. I can see so far a wave 1, which was a leading diagonal in wave C, then a wave 2, a very long and extended third wave. This now seems like a fourth, and there could be one more high in wave C of 3. First of all, what would be an ideal target for wave C of 3? So let's first of all establish an ideal target for wave 3 itself. Let's take a look at length of wave 1. We go to the low of wave 2. And basically the 1.236 extension level was already reached. That would be the absolute minimum, but we don't have 5 waves up in wave C. So I cannot really use that as... so I cannot assume it's already over. Well, possibly it is. It would be my alternative. Yeah, that this circle wave 3 is already over. Actually, it already reached the 1.38. But because, again, one wave is basically missing, my primary scenario would be that we get one more extension higher in wave 5 of C of circle wave 3. And a common target then would be the next Fibonacci extension level at $240 or $239. So let's establish that 239 seems to be a good target. There's another way of measuring it, and we can take the length of this A wave. We go to the low of the B wave. And the levels we get here are, yep, the 1.236 extension. It's a level before that, 215. Actually, I'm going to add that to the chart. It's just an additional level to watch. And then also here, 244. So there seems to be some good confluence around 240, 239. So I'm going to add these levels to the chart so we have them as potential resistances. And yeah, these are basically the ways how we can calculate targets. There's another one, but I need to have wave 4 in place for that. So now let's look at the structure on the 1 hour chart. Let's zoom in a little bit. And it currently appears to me that in this wave 4, an A wave might already be complete. The B wave possibly complete. Possibly complete would be very weak. Looks a bit like a bearish flag, but possibly complete. And the market might have started to trend down in wave C. If wave C of 4 is unfolding, then it should target round about $124. That's the 100% extension level. So that's one key level to watch. Also, the 38.2 retracement is a key target normally for a fourth wave at $129. Yeah, the 38.2 retracement. And these are the key levels. And below 115, that's also a key Fibonacci support level. Below 115, this chart would turn very, very, very unreliable. Which means that I'd be watching in this area for potential reactions and a potential start to wave 5, targeting $216 to $239, $244. So there's one more high to come, then another wave 4, then another wave 5. And this wave 5 might even send us above $300. It remains very interesting, but please be aware that below 115 things start to turn to the downside. Even if so, if we say, okay, you know, possible reward to risk ratio, let's see, it should take it to 216, which is the lower range of the target. Yeah, it would give us round about a 2.4 reward to risk ratio. Higher, obviously, if those higher targets are reached. It's not great, but please be aware that the way to trade this is not to set the stop just below the box, where you could do, but then obviously you would start very small here and would increase in position size as you go lower. And that means your reward to risk ratio increases significantly. You basically modify it, make it more attractive. You generate a positive reward to risk ratio with that. Basically your average price, depending on how low we go, should be lower. And then you would move the stop up as soon as possible. So ultimately creating a much better reward to risk ratio. Or if you don't scale into the box, you just look for basically an entry with your own strategy. It might be that you're looking for a reversal candle or something in this zone. Well, then you get a much better reward to risk ratio anyway, because you have a much tighter stop. That's my update about Coinbase. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, please check out our stocks and S&P 500 service. You'll find the link in the description. Thanks a lot for watching. Bye-bye.